So I will be covering a little bit more about the liquidity aspect and what you can typically expect in a day. So in front of us, of course, you can see this illustration, and you probably have guessed what this purple box right here is from the last week's modules. It is Asia range, of course. So remember, Asia range typically holds a lot of liquidity in the form of breakout, trend line, equal highs, equal lows, also known as your support and resistance, and then more so the newly founded smart money concepts that we identify your mitigation zones and how they fail, essentially. So remember, again, go back to those videos if you may be struggling a little bit with the liquidity aspect, because right now I will also be covering a little bit more on that aspect. So currently looking, I can, of course, identify basic liquidity aspects. Now, I know this is an illustration, but again, for orientation purposes, this is a much easier way to learn. And don't worry, right after this example, I will have a chart example as well. So we essentially have equal lows. And remember, what is your Asia low? It's always a minor inducement. So currently price has induced right at this point, minor inducement out of Asia range. So likely this is the beginning of the day from what it looks like. It could be Frankfurt or London at this point. So what we essentially have then is, of course, the minor inducement right here. We get those vector candles essentially here. Now apply this to your charts as well. I know it may look a little bit weird with the lines, but honestly, it's very key to understand this whole cycle and how it can help you essentially understand the whole lit cycle. So what do we have now? We've had a minor inducement low. It's important to understand if we want to take buys and we identify that our inducement is complete, do we also have a target to the high side when it comes to liquidity? Because essentially when we've had an inducement low, we have essentially induced enough liquidity. In this case, it being a minor inducement. Now remember, if it's a minor inducement and we get our reaction low, that does not necessarily mean our inducement is complete. We may get reactions like such over here, taking out liquidity points, only for price to then continue. So it's not wrong to take the buy that may occur here, but then of course take the sell over here when you understand that there's more liquidity to the left. So that's a key understanding of how you can trade essentially all the pushes in that case. So if we look next, what is our next targets? We have, of course, equal highs. They're pretty clean at that point. So I'm sure you can understand, of course, very clear equal highs right there. So next, what we also have is the reaction. So after our minor inducement reaction, we get, of course, essentially mitigation areas. We have other confluences that will help you enter such after the inducement, as well as areas like such over here, and how you can essentially take more than one entry. And also at the same time, we have these internal inducements of points like such here. So essentially, if that provided somewhat of an imbalance or whatever it be, that would be your smart money trap or FFS in this case, as of course price has blown through. Again, you will be taught the smart money trap and FFS a little bit later on. So just for now, keep it in your brain. Don't worry too much right now. You'll be taught a little bit later on in week 2. So don't worry. And then what we have, of course, price smokes that, gives this reaction. Everyone here is pretty sad. It's not sad, it's an X, but everyone's pretty sad at that point. Then you take the buys right here. Again, smoke through. What happens at this point doesn't mean it's complete or anything. You get, again, the characteristics of this nice reaction. It has to make sense though. So you can consider, okay, that's also a vector candle, but it's continuing to vector. We're still in the Asia range over here, so it's not necessarily valid, as well as having our equal high target over there. So what we then have, of course, okay, another reaction from that as expected. So essentially you're going to get these reactions like such over here, up and down movements, where people call this stuff higher highs, whatever, high lows and all that stuff. But we don't necessarily see it like that, as that's not necessarily the way to understand how the market moves. It's more so understanding that we're taking out structures over here. So it's not really like we're creating higher highs or higher lows. It's more so we've induced this structure point now. So have we induced enough liquidity to the left? If not, then okay, we're likely going to expect the same type of characteristic to continue and essentially take your buys from zones like such. So that being said, what will we get? Of course, we still have our range over here like such. Price, of course, what does it do? The retail traders are happy. Why is that? Not so good at drawing my straight lines, but I'm sure you can understand why. Essentially, let's clear my line and show you a better version. Is a triple top. So of course, if you're a resistance or support trader, you're going to see this as resistance and essentially take sells. And it does give you that reaction. And that's why essentially a lot of people take entries like such, because they see the rejection already over here with this reaction there. So essentially what they may do is they may even take it upon this little reaction up. And then, of course, price then makes essentially what they see as a major move at that point. So what happens? Of course, price smokes through them, unfortunately. So that maybe you are aware of this, especially if you traded this strategy where price essentially smokes through you. So what happens at this point? Now, even here, we can identify price has essentially broken out. So your breakout traders will, of course, take their entries like such here, as well as whatever you want to call it, your demand to supply type of thing. So essentially, that was your demand zone over here, or supply, sorry, to demand. Got that the wrong way around. So your supply, because essentially we expected price to go bearish. It failed right there. So when price returns, maybe it's, of course, now a demand zone. So it continues. So that's essentially where your breakout traders will get into the market, right in those areas like such. But what happens instead is we get our main inducement for the day. So when we have our main inducement for the day, it's not only the inducement of Asia high being the minor inducement, it also means that we induced medium or even major liquidity to the left. So of course, it's really important to look at your liquidity aspects to the left in the same format that we've of course covered. So we have our main inducement to the left. We also get these really nice reactions in these zones like such. Of course, these are your trap zones right there. If they present, of course, imbalances or mitigation zones, same thing, smart money traps essentially appear everywhere. This, of course, fails. What will happen here? Does that mean maybe if this one failed, this one will continue? Not always the case. And the reason being is we've had the main inducement, which is likely a medium or major liquidity being taken out. So at that point, we can likely expect price to take out all of these lows in this area like such. So let's see what would likely happen. First, we get a mitigation. So a nice mitigation here. Again, entry helper likely confirms this, and hence why you can take sells like such. Of course, smart money trap in this case. Why is that? Of course, we get a reaction. So what happens? Price now smokes through. Smart money traders are sad over here or at break even, if not at a loss, if they're not managing their positions correctly. What happens here now? Price reacts really nicely. What does that mean? Maybe another mitigation, of course. So you can take these consecutive entries like such. Again, same thing here. Is this an FFS? What is it? Smart money trap, FFS. Of course, we mark up as an FFS because it likely will blow through. Could also be a smart money trap, of course. But as we've had one here, it likely means this point over here will get smoked completely. So let's see what would happen. It would get smoked, take out all of these points. And remember, this point here where we had our minor inducement in the beginning of the day, remember, either Frankfurt or London. In this case, that is a minor inducement. Even though it does look significant, and it can be, it of course is minor purely because it's the same day's price action. It can never really be a medium inducement if it's the same day. So with that being said, of course, what happens then? It forms the continuation, and that's how you can trade your continuation trades. Now, of course, this is very, very brief of how I've explained it, and everything will become a lot clearer, especially next week in week 3. You'll be taught all the variations of the cycles as well as how to enter. So week 3 is a very, very juicy one, should I say. So with that being said, I will show a chart example as it's probably a little bit more relatable to look at a chart. But again, for orientation, do keep this in mind. So chart example, Euro GBP. So currently recording today, and of course, this was the yesterday's price action. So today being the 29th, I'm looking at the 28th purely because I can see more price action in this case as it's played out, so you can understand. Now I'm looking at it in an overall hindsight, so you can see the picture essentially. So what we currently have, of course, is several liquidity points. So if we just start on the left and how we can understand the basic cycle. So we get your resistance traders right there. price reacts as expected from them. What does it also do? We also have somewhat trend line, equal lows, whatever you want to call it, your support. There can be more than one strategy essentially. And what we get, perfect vector candles right there, essentially inducement low. So this liquidity is taken out as we now induce high, also taken out over there. So everyone here is now induced. Again, this is the end of the day. Keep that in mind. So likely volatility will become a little bit dry. So what happens then? End of day, as well as Asia, we can mark up. Same thing, equal highs, trend line liquidity, perfect trend line. It hits so many times. What happens? Price induces high, takes out the resistance traders. What happens next? Perfect vector candles like such. Again, trend line is now taken out. Alongside that, price decides to create these nice equal lows in Asia. So we get equal lows in Asia, also get these fractal equal highs there and there. What happens? Price induces high here. Your sellers over here are pretty sad at this point, if you're trading Asia, that is. Then what happens? Again, we get these channel-like buildups over here. I apologize if my drawings are not so nice. I'm not very good at using the pen tool. So anyways, as I was saying, what happens? Frankfurt open. We can definitely understand that's Frankfurt open. Inducement low, very minor inducement, takes out these sellers as well as the channel low. So it takes out two sets of minor inducements, essentially. What do we have remaining? Of course, the channel trend line type of thing over there. Again, you can mark it up in so many ways. This is also your trend line. We still have our equal highs over here. So we've induced low, high, we've induced low. So now we can go higher. Why? Because we have quite a bit of liquidity left, as well as even the Asia high being equal highs. So we have quite a bit of liquidity. What happens? Price induces perfectly to the high. Again, minor inducement, taking out your trend line there, your trend line there, as well as your equal highs there and there. So like 4 sets of liquidity points. Now it's important to understand as well to the left what's happening. So what do we have? Remember this trend line we have to the left. The whole thing necessarily wasn't induced from this point over here. If we mark it up like such, price then in London Open induces low one last time, taking out that structure point to the left. So I'm just going to undo a bit of my drawings as it's a little bit messy. So what's happened? Perfectly to the minute, London Open induces. We get the perfect reaction high. What does it do? Create this really nice high there, taking out this structure point. So of course, it's important not to take sells there. Again, you will be taught later on how to, again, read that in a nicer way, because purely we likely have a liquidity to the left. So what moves like this essentially do is allow you to take hedge positions. So it likely took out a set of liquidity like this over here, induced it perfectly. However, we may have somewhat of a trend line still building that needs to be taken out with this reaction over here. So with these reactions here, it's important to, again, only take them with confirmation. Ideally, you hedge that and then take the buys from here. Again, it's confirmed with one of our other confluences, the MMM. Right there, you can see this gray line. They're essentially our other 2 timing confluences. You will be taught that again a little bit later on. But nevertheless, key to understand, they're almost to the minute over here. And at the same time, perfect mitigations. They're not just mitigations for us, they're entry helper confirmed. So we have, again, a few confluences that will help you take this clearly, where it's not a smart money concept, essentially. So then what happens? Price now continues higher, takes out this first inducement high. First, it decides to make a smart money trap over here. This is more seen on the 1M. You can't see it right now on the 5M chart that I'm showing. However, it's a SMT on the 1M if you trade 1M mitigation zones. Price gives a reaction, gives this, I would say, horrible looking liquidity. At the same time, induces high, perfect vector candles here. Isn't complete, so it induces this last time with the perfect vector candles bullish, only to take out the liquidity to the left. Then what happens? We gear up for the sells. Liquidity building up like such. So we have at least a few targets over here remaining. So we have, of course, this point here, Can't draw properly, but we will have, of course, our minor inducement. Remember, it's the same day price action. And then, of course, liquidity points being like such over there. So now we can take sells, price induces all of the points mentioned as liquidity, like such, even your smart money trap over there. Remember, you can see that's a very clean smart money trap in terms of imbalance, and it gives a really nice reaction. You can see from the wick over there. So it reacts about that high, only to then continue. As it continues, of course, it creates this trend line type of thing, which of course doesn't last necessarily. Induces low one last time. Then what happens? Price now takes out this trend line type of liquidity formation over there, as well as these structure points like such. Now, again, it's getting towards the end of the day, hence why it can look a little bit dry. Just going to clear. So towards the end of the day, we've induced high, at the same time also creating liquidity. Taking out the low like such, smart money trap, your valid mitigation zone. Price continues higher, takes out this point here now. So of course, liquidity is taken out. Your little inducement is over there. Again, very clear liquidity over here in the form of a channel. Induces somewhat a little bit of that liquidity. Nevertheless, it's still equal highs at that point, as well as your equal lows. What happens? Price induces low again. Same time, still equal lows. So it's induced only essentially this part of the liquidity, as well as the SMT that was formed over there in this mitigation zone. What happens? Price reacts somewhat a little bit, gives you these little liquidity points like such, equal lows, equal highs everywhere. Now, this is probably the most perfect vector candle that you would see. What happens? Induces the low, equal lows, as well as this structure point to the left. Induces low. What happens the next day, which is currently today for me? This is, of course, your Frankfurt Open inducement. Upon that, equal highs, price reacts in these nice zones over there. London Open, you can see a little bit. Price induces this liquidity point and ultimately will induce all of this points over here and take out Asia high liquidity being also the equal highs over here. So again, I hope you understood that. It's the same cycle again and again and again. I would highly recommend you do the same thing, what I just showed you. Mark up these liquidity points, exactly how they appear to you. If you get it wrong, don't worry. Of course, that's what your group is there for, your week 2 group at this stage. Start sending in your charts and we will, of course, help you out on that. So I hope you understood and I hope you enjoyed this session on the liquidity aspect.